Welcome to Furniture Industry News. Today is August 21st, 2024. Let's dive into today's top stories in the furniture industry. In Q2 of 2024, the home furnishings sector saw a modest rebound. This slight recovery was driven by several factors, including easing inflation and higher spending from renters. While the furniture and mattress categories continued to experience declines, the rate of decline slowed down compared to previous quarters. For example, furniture retailers were down about 6% year over year, an improvement from the 9% decline witnessed in the first quarter. Mattress and bedding retailers also saw an improvement, with spending off by about 2% compared to a 3% decline earlier. Home decor remained stable, with spending staying even but still notable among price-sensitive consumers, offering an affordable way to refresh their spaces without significant investment. This segment showed resilience and hinted at a shift in consumer priorities towards making functional yet personalized living spaces. Overall, while the market remains in recovery mode, these trends offer a hopeful glimpse into the sector's potential for continued growth. Conn's HomePlus and Badcock Home Furniture and More, both bankrupt retailers, are heading to auction with their assets. The sale includes a wide range of items, such as consumer loans, real estate parcels, and inventory. U.S. Bankruptcy Court has set the bid submission deadline for 4 p.m. Central Time on September 6th, with the auction itself occurring at 10 a.m. Central Time on September 11th. This auction presents a significant opportunity for bidders to acquire valuable assets from these two major retailers. Keep an eye on this event, as it could lead to substantial market shifts in the furniture industry. A major labor dispute is brewing on two fronts, in Canada and along the U.S. East Coast. Some 9,300 Canadian rail workers are poised to strike, potentially shutting down the country's two biggest freight railroads. This would be devastating, as about 75% of Canadian exports to the U.S. move by rail. Meanwhile, on the U.S. side, dock workers at East Coast and Gulf Coast ports are also facing contract expiration. If both strikes happen simultaneously, the impact on the supply chain could be severe. Container rates are expected to rise due to the disruptions, and the economic fallout could be significant for both countries. Perigold, the luxury retailer under the Wayfair brand, is making a significant move by planning to open its first brick-and-mortar store in West Palm Beach, Florida, by fall 2025. This new storefront, located in the City Place shopping center, aims to enhance customer interaction with their high-end home products. Shoppers will have the opportunity to experience luxury brands firsthand, including Century and Visual Comfort. The store will span nearly 30,000 square feet over 2 floors, providing ample space to showcase their extensive product range and create rich, tactile experiences for their clients. This marks a big step in Perigold's expansion strategy as they move from an online-only presence to physical stores. La-Z-Boy reported a notable rise in sales for the first quarter, showing a 3% increase over last year. This growth was largely driven by gains in their wholesale segment, even as retail sales faced some challenges. According to Melinda Whittington, the CEO of La-Z-Boy, the company managed to achieve these positive results despite a tough macroeconomic environment. Wholesale sales saw a 5% boost attributed to increased volumes and an expanding channel strategy, while retail sales fell by almost 3%. Yet La-Z-Boy remains optimistic, continuing to invest in customer service and a diversified product assortment to ensure long-term success and resilience in a fluctuating market. Macy's faced a challenging second quarter with a 3.8% drop in sales, but the retail giant managed to maintain profitability. The decline in discretionary sales led Macy's to adopt measures like canceling receipts and increasing promotions. Total company sales fell to $4.9 billion, slightly below expectations, but net income reached $150 million, an improvement from the $22 million loss in the same period last year. Notably, Macy's first 50 inches pilot stores, which aim to set an example for future operations, have shown increased traffic and higher conversions, indicating that Macy's strategic initiatives are starting to take root. Despite the setbacks, these pilot stores have outperformed other locations, generating a 1% increase in comparable sales and outperforming across all merchandise categories. Going forward, Macy's will continue to focus on these pilot stores as part of their strategy for sustainable growth. TJX saw improved comparable store sales and a rise in customer transactions, with notable performances in both apparel and home goods. CEO Ernie Herrmann attributes this success to the company's flexible off-price business model, which has been particularly appealing to value-seeking consumers. The availability of affordable merchandise has allowed TJX brands, such as Marshalls, TJ Maxx, and HomeGoods, to attract a growing number of shoppers who are looking for great deals. Herrmann expressed confidence that this value-driven approach will continue to resonate well with customers, driving the company's growth further. Flexsteel reported a 4.7% increase in net sales for the fourth quarter, bucking the industry trend of decline. This marks their third consecutive quarter of year-over-year growth. The company attributes its success to several factors, including innovative approaches, a strong focus on customer experience, and strategic expansions into new markets. Despite the challenging conditions within the furniture industry, Flexsteel continues to push forward with strategies that highlight their commitment to quality and customer satisfaction. With promising trends in both their retail and wholesale segments, Flexsteel remains optimistic about maintaining this positive momentum into the next fiscal year. Target reported stronger than expected performance in the second quarter, with discretionary trends showing improvement, especially in women's apparel and beauty categories. Surprisingly, home goods didn't perform as well, proving to be softer than the apparel sector, which saw a 3% gain. Overall, Target's total company comparable sales rose by 2%, a significant improvement from the previous year's decline. The company also saw a notable 42.7% jump in net income, reaching $1.2 billion. With back-to-school, college, and Halloween seasons approaching, Target is optimistic about driving further growth in the coming quarter. Thank you for tuning into Furniture Industry News. Don't forget to subscribe to our podcast to stay updated on the latest industry insights and news.